Saudi Arabia is quietly rewriting the rules of national wealth by moving trillions in real-world assets onto blockchains. This isn't speculative crypto hype. It's a state-driven economic transformation aimed at future-proofing one of the world's largest sovereign economies. At the center of it all is RWA tokenization, a strategic pivot that could redefine how nations manage energy, real estate, and capital markets in the digital age. The Public Investment Fund, Saudi Arabia's $1 trillion sovereign wealth engine, has formally approved its 2026-2030 strategy with on-chain asset tokenization as a core pillar. This isn't just about modernization, it's about survival in a volatile global system. By converting physical assets into digital tokens, the kingdom aims to lock in value, improve liquidity, and shield its economy from external shocks, all under the umbrella of Vision 2030. The goal is clear: diversify beyond oil and do it with blockchain as the backbone. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. In January 2026, Open World launched the first licensed RWA tokenization center of excellence in Al Khobar, operating under strict Saudi regulatory and data sovereignty laws. This isn't a pilot experiment in a foreign jurisdiction. It's a homegrown, regulated platform designed to tokenize energy infrastructure, real estate, and even carbon credits. The center's launch signals a major shift. Blockchain is no longer fringe technology in Saudi Arabia. It's now part of national infrastructure. Pilot projects are expected by mid-2026, setting the stage for real-world deployment at scale. The important part isn't just that assets are being tokenized, it's what that changes. Tokenization turns illiquid, high-value assets into tradable digital units. A power plant, a commercial tower, or a carbon credit stream can now be fractionalized, tracked, and traded with near-instant settlement. For a country aiming to attract global capital, this removes friction. It also gives the PIF finer control over capital allocation, allowing them to measure returns over decades, not quarters, as Governor Yasser Al-Rumayyan emphasized. This isn't happening in isolation. The kingdom's digital economy already hit SAR for $95 billion in 2025, 15% of GDP, and hosts 3 million active crypto investors. Over 4,000 blockchain companies registered in 2025 alone, a 51% year-on-year jump. Still, challenges remain. Tokenized infrastructure sounds efficient, but who controls access? How are disputes resolved? And what happens if global markets reject these assets as too opaque or too centralized? The technology works, but trust is still being built. There's also the question of interoperability. Will these tokens trade on global blockchains or remain siloed in domestic systems? The next signal to watch is the mid-2026 pilot launch. When the first energy or real estate asset goes live on-chain, it won't just be a technical milestone, it'll be a statement of intent. Other Gulf states are watching, so are global investors. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The real story isn't just that Saudi Arabia is embracing blockchain, it's that it's doing so with intention, scale, and regulatory clarity. RWA is no longer a niche concept. It's the foundation of a new financial order in the Gulf, and the first real test comes this summer when the pilots go live. That's when we'll see if this vision can survive contact with reality.